Hi and welcome back to another video. My name's Connor, and in this video I want to take a quick look at the latest brainwave by the UK government, which is the 50-year mortgage, which is aimed at trying to help solve the housing crisis. That's right, 50-year mortgages, if you can believe it. The core idea behind the 50-year mortgage is to enable the mortgage to be passed on to the next generation. So families can buy bigger homes with the cost being spread out over 50 years, then the leftover mortgage loan can be passed on to the children. That's the idea. It's also been reported that banks will up the amount that they lend to buyers from where it sits now, which is about 3.5 to 4.5 times annual income, to 8 times your annual income. To give you some numbers, this basically means that someone earning £50,000 per year could potentially borrow up to £400,000 compared to £150,000 at the current rate, which is 3.5 times your annual income. This, in my opinion, is a terrible idea, and here's why this could potentially cause the next housing bubble here in the UK. But before we jump into the details, please remember to hit that like button and of course subscribe if you get any value from this video or any of my previous videos. So, reason number one, the government is just putting more people in more debt. 50 years worth of debt. Okay, it's just more debt for more people over a longer period of time. Number two, my opinion is it's going to push property prices even higher because you're enabling people to borrow more, therefore they can offer more, meaning if they really like a house and they aren't savvy and the agent gives them the old it's highly sought after area pitch, they could end up offering way above the house, what the house is actually worth, just because they can, just because they have the ability to borrow more money from the bank. Reason number three, let's do a little example. What if the original purchase, let's say your parents, buy a really expensive property because they had great jobs, then they die and the loan gets passed down to you, but you don't earn anywhere near as much as what your parents did. You're now stuck with a potentially huge loan, huge mortgage payment that you can't pay just because your parents put a 50-year loan term on their house. It's outrageous, it's ridiculous. And then reason number four, you're opening up the housing market to a whole load of new potential buyers, which in theory sounds great, this sounds excellent, but it means that property prices will go up because of simple supply and demand economics. You're going to have more people wanting to buy something where there isn't more of it. So there isn't any more houses just magically because there's more people wanting to buy. You have the same amount of supply, but more demand. You also end up paying more for the same property over the long term because obviously you're paying it for longer, so therefore your interest rate is spread out over the longer term of the loan. So you pay more for the same property. When they introduced 30 to 35-year mortgages originally, it was because of affordability restraints. So it's kind of similar to what we've got now. People couldn't afford to buy the properties over 20 to 25 years because the mortgage payments were too expensive. So they thought, okay, well, how can we solve this? Let's introduce longer loans. So 30 to 35-year loan terms became the norm. This in turn pushed house prices even higher once again. The thing to realize is that this move, if this comes through, it's great for property investors because it means that house prices will go up, so your investments are going to go up. But it's not good for people wanting to get on the housing ladder again. This is not going to solve the problem because all you're doing is pushing house prices even higher and putting people in even more debt from an earlier age for longer. There's not too much more to say on it at this point, but there will be, when more comes out, I'll make sure we've done the video and give you an update and see if we can get any more details about this. But for now, that's it from me. I hope you got some value out of this video. I hope it is useful and you kind of got a bit of a perspective on what this new 50-year mortgage looks like. And if you did, please remember to hit that subscribe button, hit that like button, and guys, I'll see you in the next one.